Hey, what's up, my friend? So in today's video, you will learn a trend following system that has generated 2,864% over the last 25 years. This trading system has about a 14% annual return and a maximum drawdown of 37%. In other words, compared to a buy and hold on the S&P 500, this system has higher returns and lower risk. And the best part about this trading system is that it makes a killing during a crisis or a recession. For example, during the dot-com bubble in 2000, the 2008 financial crisis, the Russia-Ukraine war, periods like this is where this trading system really shines. This means you will make massive profits while other traders are losing their pants. So if you're interested, right, then let's get to it, because I will explain to you the exact trading rules, the entry, the exits, the chart examples, and much more. So let's get started. So trend following, what is it? So this is a trading strategy that originated from the futures market. So this is why it's called futures trend following. And it's used by famous traders, the turtle traders. Guess what? They are trend followers. Market wizards like Ed Sakota, and I don't know who else. I've read a number of them, right? They all are trend followers as well. So this trading strategy has been around for a long time, and it's proven to work, and there's a good chance it will continue working for the foreseeable future. So this is a strategy that allows you to ride trends across different asset classes. You can profit in bull and bear markets because you will go long and short. And you're trading different asset classes like indices, bonds, currency, metals, soft commodities, etc. So this is actually one of the secret sauce. Yeah. So let me just walk you through the concepts behind this strategy. So number one, you want to be trading as many markets as possible because it increases the odds of you capturing a trend. So earlier I've shared with you the different types of markets we trade, and of course I shared with you over here are the different types of markets. Like currencies itself is not one market. You can have multiple currency pairs: euro dollar, pound dollar, Aussie dollar, blah blah blah, right? Maybe even 10 or more. Same for metals. You have gold, silver, copper, etc. So you can see that all these different asset classes will give you many markets to trade off. And like I've said earlier, we are pretty much going to buy markets that are in an uptrend. We go long in an uptrend, and we go short in a downtrend, and we will ride the trend till it ends. And the reason, or rather the way we ride the trend, is using this thing called TSL, a trailing stop loss. And again, later on I'll share with you the indicators that you can use on TradingView to execute it. So let's talk about the trend following system that you're about to learn. So as mentioned, we are trading across different markets. So these are the specific markets that I've put over here that will be used, right, for the backtest later on. So currencies, we have pound dollar, dollar yen, Aussie dollar, euro dollar, dollar against the Chinese yuan. So I'm not going to go through them. You can read it for yourself. Time frame is the daily time frame, and our risk management is 2%. So what this means is that when we put on a trade, and even if the trade goes against us, we'll lose about 2% if it hits our trailing stop loss. It's not guaranteed 2% because we are trading on a daily time frame, and we are waiting for the candle to close. So sometimes the loss might be a little bit more, like 2.2, 2.3, 2.4, 2.5%. It is possible, but it doesn't happen often. So these are the parameters that I'll be using for backtest later on. Now let's have a look at the rules of this trading system. It's really, really complicated, so brace yourself. You ready? Let's go. Ta-da! That's it. Just 2 lines. Yeah. So to go long, we will simply go long when the price closes the highest over the last 200 days. So simply put, right, we are looking for the highest closing price over the last 200 days. If the market makes the highest closing price over the last 200 days, we go long. And we have a 6 ATR trailing stop loss. ATR stands for average true range. This is a volatility based trailing stop loss. And to show you how this looks like on the chart, it will look something like this. Let's say the market goes up, comes down, and let's say this is the highest price point over the last, let's say this is over the last 200 days. If the market goes up and it breaks out, we go long. Let's call it L. And we ride the trend till it starts to reverse, and then over here we sell, thereby allowing us to capture the meat of the move. Let's call this MOM. Not mum, but the meat of the move. So that's the idea behind trend following, and this is a long example. A short example is just the inverse. We go short on the breakdown when there's a lowest close over the last 200 days. So something like this, closes below the lowest closing price over the last 200 days, we go short, we ride the trend down till it ends. Over here, let's say reverse, and we buy back over here. So thereby allowing us to again capture the meat of the move over here. So this is in essence what futures trend following is about. And what about a trailing stop loss? Well, how do we know when exactly to exit the trade? So this is where I'm going to walk you through a few examples so you can see this in action. Now let's have a look at some examples, shall we? So the first one is a trading setup on coffee. Okay, and a couple of indicators that you will find it useful. Let me show you the first one. The first one over here you can see is the Donchian channel, but this one is actually modified to plot the closing price. So where do you find this? I actually developed this one myself using an AI. So just look for Donchian channel, and this one is called you can be able to find this one bracket closing price. So that's the one I'm using. Okay, and it looks something like this. The settings over here, just change this to 200, and you should have something that looks something like this. So if I think it should be quite simple. Donchian channel closing. Let's see what pops up. Oh, there you have it, right? Wow, my name here. Anyway, yeah. So this is the one. Okay, so I'm just going to remove the extra one. There you have it. So feel free to use that. And next thing is, okay, so you look at it at this point, you can see that this market, coffee, we're waiting for a setup and entry trigger to go long. So when the price touches this blue line, so this blue line over here demarcate or highlights the highest closing price over the last 200 days. So if it closes into this blue line over here, it's an entry trigger to go long. So what happened next is kaput. There we have it. This candle, the market has closed, right? It's now at this point, it's now closed the highest over the last 200 days. And since now it can only be confirmed after the market has closed, you can't trade after the close unless you want to do after market hours. Don't recommend that. Wait for the next trading day to open and then you trade it. So put, right? Next day, market open over here, and that's where you go long. Right? This opening price, you go long. Now the question is, how do you then trail your stop loss? So this is where the second indicator comes into play. This is a chandelier exit. Okay, so if you want to look for it, I think you can just go to trading view. I believe I used this one from this one over chandelier exit. Yeah, this is the one I used. Yeah, they have it, looks similar. I'll remove the duplicate. And the settings are over here, 6 ATR and 20 period. Click OK. And there you have it. You have this green line that pops up at the bottom. So what you're going to do is to trail your stop loss. So when this market closes, let's say it suddenly reverse and closes below this green line, okay, you exit the trade because your trailing stop loss is hit. It has hit 6 ATR trailing stop loss. So in this case, let me just fast forward. Okay, so this one I have to be honest, I cherry picked this chart to show you how it's like riding a trend. Looks easy on the chart, but remember this is a daily time frame. You have to endure all this ebb and flow of the market. You can see it breaks out, it makes a pullback, almost hitting your stop loss. You still got to hold this trade, and then eventually breaks out higher, makes another pullback, heads up higher. Again, almost hitting your trading stop loss, and then go kaboom. So that's the nature of trend following. There's a lot of battle of your emotions, if you ask me, especially those of you who are new to trading. This is a strategy that, again, not most new traders is able to handle, honestly speaking. Okay, then you can see over here, let's see when does it break below the trailing. There, over here. Finally, on this candle over here, the market breaks and close below your trailing stop loss, which is over here. And since the market is closed, you can't exit. So your earliest exit will be on this candle over here at this opening price. This is where you sell this position for a nice profit. Okay, so this is how the futures trend following system look like. So, and there you have it, right? This is the idea behind futures trend following. And now, since our rules are objective, we can look at the results over the last 25 years. So you can see over here, this is the equity curve I shared with you earlier. And month on month, year on year, this is where it's important. Have a look. So you can see that as a trend follower, you're not going to make money every month or every year. I think same goes for all trading strategies. Nothing works all the time. But what's remarkable about trend following, in particular futures trend following, is that during a crisis period, during a recession, when the stock market is taking a beating, this strategy usually does well. You can see in 2000 we have the dot-com bubble, up 22%. 2008 financial crisis, up 65% for this system. 2020 with COVID, up 8%, not huge. 2022 with Russia-Ukraine war, up 25, or rather 56%. So you can see that this is a system that thrives during difficult market environment. And if you look at the matrix, total return 2,864 since 2000, so annualized basis is about 14% annual return. Your winning rate is about 45%. You can see that it's less than half, so you're actually losing more than half the time, or rather you're losing more than half the time. Yeah, correct. You're losing 54% of the time to be exact. Your payoff ratio is 1.74, so you can see that on average your gains are larger, pretty large, right, relative to your average losses. And your maximum drawdown in this system is pretty steep, 37%, and it's not out of the norm, right, to see drawdown exceeding 40, 50, or even 60%. So they are trend following hedge funds. They have maximum drawdown of, in excess of 50, and that's really the cost of being a trend follower. The drawdowns are not fun to go through. It's painful. It will test your emotions. It will test your resilience. In fact, let me just go back to, let's see. All right, I have all this data exported on Excel. So you can see over here, there's all this data exported. You can see that as a trend follower, there are periods where you just have to kind of like suck it up, right? You can see over here, since over here, made a new high and then kind of like, drawdown for the next few years over here. Same thing for this, made a new high over here and then you have to go for drawdown for a few years. It might look short on this chart, but it's like a few years. It's not like a few weeks or few months. So as a trend follower, your winning rate is low, as well as you have to be able to endure this lengthy drawdowns. So pros and cons of futures trend following is number one, there is no correlation to the stock market. So this is a good thing for those of you who are, let's say, stock investors, stock traders. You want a system or strategy that is diversified. Futures trend following is something worth considering, because later on I'll explain why this is the case. This usually does well in a bear market, as you've seen earlier. The downside to this is that this system, this strategy, has a low winning rate. Generally, trend followers winning rate are between 30 to 45%, and it's difficult for most traders' psychology, especially if this is the only trading system that you trade. It's really going to test your heart and soul. Okay, so but that's it. There are things that you can do to kind of alleviate this pain, especially if you have multiple trading systems, or if, let's say, you are long the stock market. You could be an investor, a growth investor, value investor. If the stock market is bullish, your stock investments are likely to make money. And trend following, maybe the period doesn't make or do it that well, doesn't matter. At least your stock investments or stock trading is providing cushion for it. At the same time, when markets are bad, when your stock investment portfolio take a hit, guess what? Trend following will shine. And so this means that your losses from your stock investment will not be as painful because you have trend following. Make sense? Now, before you go, I'd like you to get access to this free training. You can get it at tradingwithrayner.com/go, or in the description or in the comment section below this video. So in this training, you will discover 3 rule-based trading strategies that work, and they're all backed by data. In fact, the strategy that you've just learned is actually taken from this training. So you will learn, in other words, 2 more extra trading strategies. And again, I'll walk you through the trading rules, the entries, the exits, the risk management, and chart examples, so you can quickly understand the concepts of these strategies. And that's not all, because I would also like to give you the PDF slides of this training, the trading strategies cheat sheets, so you can quickly recap the rules of this different trading system, and the backtest report of all these different trading systems, so you can see the winning rate, the losing rate, what is the payoff ratio, etc. All the backtest report given to you in this training for free. So everything is free over here. Just go down to tradingwithrayner.com/go, or I'll put the link somewhere in the description below or in the comment section below. Just click on it, you come to this page and you can get started immediately. So with that said, I wish you good luck, good trading. I will talk to you soon.